One of the most important areas that state attorneys general have really found themselves a big player in is in the financial services, and certainly for the whole financial institution world. Certainly after the financial crisis in 2007, 2008, the new laws, and after the Dodd-Frank Act was passed, you find states really getting themselves more deeply involved in how banks operate and frankly, how the whole financial industry works. So before that time, while states would dabble in financial services issues, you really find them now day to day involved in how these institutions are operating, trying to figure out, are consumers being treated appropriately? Are consumers having the information they need to act appropriately in the marketplace? And so states have really found that financial services and all the related industries are particularly important.
Increasingly, we're seeing state attorneys general have dedicated units to financial services issues, which we had just never seen before, and really sophisticated staff, some of which come directly from the Consumer Financial Protection Bureau. And so these state offices understand these issues. And so that's one thing that I recommend to clients, is not to think that these state attorneys general don't understand your issues, because indeed they largely have sophisticated staff that does understand the issues. One interesting point that we've seen from financial markets clients when they get inquiries from state attorneys general is a natural inclination to write them off, in a sense, thinking that the state attorneys general don't have power over what they're doing. And I think we really have seen a pushback from state attorneys general since the financial crisis on federal preemption issues against banks. And so they've essentially been able to use their kind of broad investigatory authority and their consumer protection authority to challenge conduct that has typically been considered to be preempted or in the realm of other regulators.
You'd be hard-pressed to find a financial services company that really hasn't had some element of their business looked at closely by an individual or group of state attorneys general. In advising these companies, I really try to make sure these companies understand what it is that these states are interested in and what the regulatory goals are down here. Because one thing you are finding is that states are not only trying to look for gaps in where the regulatory nets might be, but they're also trying to create policy in a way to set new goals for local policy, state policy, and even national policy.
Companies should look at their fee-based products and services and make sure they are compliant with all rules and regulations, and to make sure that they are as transparent as possible in how their products work, what fees will be charged. Another area that financial services companies or financial institutions should be paying attention to right now is really any products or services they provide that might have a disparate impact on a minority or disadvantaged community, even if they did not intend to have that disparate impact. So they should really be looking at outcomes. So for example, lending institutions, if their loan population doesn't mirror the minority population in the greater community, financial institutions should look at why that is. State attorneys general are going to more increasingly pull back the curtain on conduct to see why there are those outcomes. First, consult with counsel to determine whether the state attorney general has the jurisdiction or the authority to be asking the questions or making the inquiries that they're making. There are considerations where even if a state attorney general is acting possibly beyond their authority, whether companies still want to comply and provide information. Companies should also look at, if they've received an inquiry, whether it's an inquiry that is likely to remain as a single inquiry, or if it's some area that is likely to cause them increased scrutiny by federal agencies, private litigants, Congress, and even some trend that we're seeing now is the use of kind of these mass arbitration attacks. And so whether plaintiffs' counsel are able to kind of aggregate large number of claimants to bring arbitration claims against these companies.
So you really do need to step back and look for guidance from your lawyers, which we're happy to do, but also look at guidance from what else is going on in that regulatory environment. And then it's important to engage with those states that you think are going to be leading the discussion in trying to form new pathways for this industry to move forward. This is an incredible engine of growth. It needs to be in a world where the legal challenges are the least of their worries because they understand the predictable and certain ways to deal with the law.